Today started off the week with a better result than what we saw at the end of last week, and I think you'll see with a lot of the patterns that I'll show you here today that it appears that this bounce is more just a little bit of a breather from the selling that we saw, starting with that credit downgrade last Wednesday, going through Apple earnings. Apple continued its slide, though it was an outlier among the mega caps in terms of weakness, especially in the communication services space, which really rallied, even discretionary rallying off of its intraday lows, thanks to a little bit of a bounce in Amazon. The issue is whether or not the bounce is enough to take away that bearish signal that we saw on Friday, whether it actually turned it into a bounce signal or not. And as of right now, it doesn't appear to be the case, and I'll show you why. And we'll take a look at some asset classes that are not confirming the bullishness and some of the moves we're seeing, especially in bonds and the dollar. And commodities is something we're always kind of watching. And then we'll take a look at the sector rotation as well today and what sectors are doing well. So some very predictable, others aren't. We'll talk about why. And then, of course, our trade idea as the stock itself has pulled back down. And if we are going to bounce up in the market, this is the type of pattern that we'll probably see on this stock for a good bounce trade. And we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, August the 7th, 2023. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get started, I'd invite you to subscribe to our YouTube channel with this icon here or the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. All right, if you're watching here on our blog, check out some of these other things over here on the right, including our Market Outlook live video. Come down to the bottom, click on this heart. It opens up this tab. Click that like button there. Same thing here. Click on this heart thumbs up icon. It opens up this tab. Hit that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So we always ask for it day in and day out. So thank you to those who do like that. Like these, especially those on Twitter. Our goal is to get up to 100. So thank you again. And those who don't, you can do right now while you're watching with 1 or 2 really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we bounced off so far the bull tag, very similar to the last few times we've gotten these bull tags. We've rebounded every single time, even this one that we didn't quite get to the moving average. So far so good in that respect. The market sentiment line is obviously a lot higher now than it was in either of these other times, especially these two, where it was not even in bullish territory there, and then here it was still rising without being in the reversal zone. Now we're in the reversal zone, and you're rising towards the 85th percentile as we speak. The intermediate line, however, is falling. It's not at its lowest level. It was actually lower previously, and it's not down to that point yet. Short-term sentiment's bouncing. The near-term line still hasn't bounced back up yet either. You'd like to see it with the intermediate line now not in the reversal zone. You'd like to see the near-term line cross above the intermediate line and get back in there, right? So kind of like it did right here, and that kind of signaled the bounce back up, and like it did right here, and it signaled the bounce back up as well, and same thing here. So it's one thing for the near-term line to be below the intermediate line while it is in the upper reversal zone, but now that it's out of it, the near-term line needs to come up and cross up above that. So far today is a good day. We're obviously not above Friday's high point, still inside of that range, so it's not. And you have a gap you'll see here later today that we need to fill from this morning. So it's a good start to a week. I wouldn't say necessarily that we're all gung-ho like we were back in May, the end of May, or even here in the beginning of May when we at least went sideways there for a while. So that's kind of how I'm seeing the S&P. The Dow Jones actually had a good, better day for most of the day. The S&P kind of caught up to it at the end. You'll see why in a little bit. But same thing, the intermediate line is actually still in the reversal zone with long-term market sentiment still catching up. Remember, it had its move higher here along with UNH, its response to its earnings announcement, and that's really what broke it out of its range that it needed to break out above here on the 18th, and we're still in the range of the past couple of weeks. So we're not necessarily getting up to new highs there. The NASDAQ, the intermediate line, so we didn't jump up as much as the S&P, and the intermediate line is actually now out of bullish territory. So this is the first time it's not in bearish territory, but this is the first time it's fallen out of bullish territory since way back here. So another sign of weakness for the NASDAQ. And again, you'd like to see that near-term line get up above that intermediate line, and we're still not quite there yet. And then get in the reversal zone, right? That's the other side of that equation, and stay there. And then finally, your Russell 2000, you can see its intermediate lines barely crossing market sentiment, as both are still in the reversal zone. So the Russell 2000 is actually not even close to a bull tag. Its short-term sentiment didn't even get into the reversal zone. So this is actually a, like Friday here, this is actually a bullish intermediate confirmation signal with the momentum intermediate line in the upper reversal zone, the momentum line in the lower reversal zone, but not too oversold, and then the near-term line bouncing back up without actually being in the lower reversal zone at all. So again, it didn't bounce up very much. It was kind of flat today. It wasn't the most bullish day. It also hasn't been as bearish either. So we'll see how that kind of catches up over the next few days. All right, now let's take a look at the long-term chart. As you can see here, we have the transition candle from last week we talked about on Friday, and then now the beginnings of a weak bearish candle. It's not that big. You can see it is negative. It's the first time. The week's not over with, of course, but as of right now, it's the first time it's been negative. So you didn't even get negative over here since the last intermediate decline. So that doesn't necessarily mean that we're gonna like tank from here, but it has dropped below zero, obviously below its moving average, and we don't have the red arrow yet, which is another indication of weakness. When you cross below the 10-week moving average, we don't have that yet, so that's something to keep an eye out for. Your NASDAQ 100 has a little bit more of a bearish candle. Its PPO is now falling, so that's something to keep an eye on too. Again, no red arrow yet on that either. It's obviously the weakest out of the indexes. When you look at the 3 green arrows chart, remember we did have 3 red arrows on the NASDAQ and the S&P 500. They're back to at least 1 green, the 2 red still down there, so it's back to not having any pink shading. So that's a good sign as well. Remember, we didn't even get a day of pink shading yet on the diamond or the Russell 2000. Looking at the 2-line version of this chart, you can see we bounced up off the 30-day so far. We are back slightly above the 17 and the 8, so let's see if we continue with that. The MACD, member, is still easily below its moving average, and the stochastics is now well in the bearish territory. So that would suggest that today's move is more of a one-time deal, not necessarily the beginning of a trend, so to speak. You can see there's still not very much support down below, well into the gap between the 50 and the 200-day moving average because of the lack of volume here. We moved up so fast in a couple of months. We haven't built up a lot of volume above the value area for the past year. Let's look at some of the other indicators. The DMI, you can see the positive indicator did drop below 25. The negative, however, also dropped and dropped back below 20. So kind of more neutral. As you can see, that ADX there is plummeting right now. So there's not really a trending move at all going on. We did drop, remember, we dropped below 150 down on the CCI and dropped below 450 on the RSI, but they both have bounced back up. Not to bullish levels, but at least they stopped their declines, at least for a day. As you could take a look at the Ichimoku cloud, they still have a strong bullish trend. Remember, the NASDAQ doesn't. The NASDAQ ended its trend. All the others are still okay, right? They're still strongly bullish. And the S&P 500 is also still easily strongly bullish too. So we'll see how much longer they can maintain these strong bullish trends, considering the NASDAQ has ended its trend, especially with the breadth as negative as it was today. You can see the McClellan oscillator still below 0. We're not back below 500 yet, so that's a good sign. And obviously easily above 0, so that's ultimately what matters the most when it comes to that breadth. We are back in the upper half of the bandwidth. We never did get into the lower quartile. The bands, however, though, have crossed into the Keltner channels. So you get back to a red dot there, and again, that typically signals a transition from one momentum to another. So we'll see, again, how long we might go. Last time it didn't. Last time we turned back up. And even before that, we really didn't either. Small little transition to bearishness, as you can see, very small. Never did get green dots on that bearish trend. So really, those are the, we've been bullish this entire time without the reversal. Are we going to get a third time where we don't get a reversal? Obviously, just once is unlikely, and having 3 on the same move is definitely unlikely. Take a look at, obviously we did not get a new high. We did not fill in this gap yet from back on the 2nd. We have a common gap from this morning that will most likely get filled in sooner rather than later. So that's something to keep an eye on. We did close, you can see at the highs of the day. It was a higher low, it was not a higher high. So it was an inside day, and we'll see if that ends up being a reversal. The Arun indicator is still set up for a transition to a bearish move as we are back below 70. And obviously already easily hit 0 on that indicator down there, and remember that low point here is going to move up tomorrow here, and then it's going to move up the day after that up to here, and the day after that up to here. So which would make this low point the new 4-week low point. So we're just a couple of days away from that red line jumping. The question is whether it's going to jump to 100, right? Whether the low point is going to be actually on the day, and assuming this gap gets filled in, and assuming the lack of volume, lack of support down below here, you would say that's probably the more likely scenario. After a very strong day of volume and range on Friday, we dipped way back down, right, way below average on the range, not including the gap. And then, of course, well below average on the volume. So we got a pretty important week ahead of us, and we're starting off the week with some relative weakness, right? A rally, but very small move. Not a lot of breadth, not a lot of volume. So not a move that we'd expect. Oh, here we go. We're bouncing off support with a strong move to the upside. More likely, it's just a breather from the weakness we had over the past 3 days, and we're just rebounding here. All right, now let's take a look at what's driving a lot of this price action here, and we'll take a look at, you can see again, the bonds and Qs are the biggest movers over the past 3 months. But of course, let's look at just today. So let's come over here to like a 3-minute chart, and you can see the Qs really driving most of the gains. As you can see, IWM was pretty flat down, or flat for most of the day. You still got a big jump in yields, a drop in bond prices, and real estate rebounding. That's been one of the more oversold asset classes here lately. You can take a look at V and Q. It's as flat as it's been. In fact, if you look at like its weekly chart, it's been on this. Here, let's go to like a market forecast weekly chart, and then go back to V and Q. You can see how it's been on this decline for most of this 2022 and even into 2023, and we still haven't really recovered. Now it's got a bear tag this week, which could signal, in the past 3 bear tags have all been reversal signs. Of course, bullish patterns start with bear tags too, as you can see here. So we'll see if that ends up being the case on V and Q. TLT, on the other hand, again, getting this cluster as of right now this week. But if you take a look at what it did here today, you can see how far down it was. If you look at TNX, TNX was up to 4.07%. Even if it was off the highs, you can see the near-term line down, momentum line down. So yields are trying to, I think right now, yields are going to figure out what it wants to do right here, right a little bit above 4%, whether it's going to hold this breakout or not, that it got above this 4%, and hold this and continue to push higher, or is this going to be the end of it? The intermediate line is in the reversal zone. The near-term line did not stay in the reversal zone for very long. So if it is going to bounce, then you kind of want to see this intermediate confirmation signal, which is what this is here, an oversold momentum line with a strong bullish posture and a near-term line that's down. You want to see that play out into a bounce to the upside. course, in the past, it hasn't been the most bullish for equities. So we'll see how that ends up affecting things. Of course, the other side of that coin is what the dollar does. So if you look at the US dollar, you can see it is still in bullish territory here, and it did move up higher today, another 0.25%. The intermediate line is rising. The near-term line, of course, is below it, but is bouncing up off of a low point there in bearish territory, and we'll see if that continues to play out. Again, rising yields, rising dollar hasn't been the recipe for bullishness, especially when it's been combined with rising commodity prices coming off of its own near-term low point. So let's pay attention to see how this moves the rest of this week, especially with inflation data due out at the end of the week here. Let's take a look at how some of the breadth signs I've been mentioning before, how we are below the moving average on the new highs and new lows. Let me just update this to make sure we have, so we are, again, below zero, minus 43. That's not the biggest, strongest level. Getting below minus 100 can be a significant factor here. And you can see it was actually below minus 100 for most of this little rally. That's why that breadth was so poor into the late stages. But being below the moving average, being below zero is not the most bullish, even if it's not necessarily a bearish territory. And the same thing here, you're still above 60%, but you're well below the moving average, which actually got above 80%. And then you look at the 200-day, same thing. You're still above 60%. The moving average there right around 70%. But still below it. So, not the strongest breadth signals that we've seen. And what I didn't bring up in the market forecast was the skew jumping up to yesterday, jumping up to 140. Let's see here. Let's see if we can get the actual release here. So on the 4th, it got up to 147. Today, again, making a jump up to 150. So another factor here, another sign of that the options market at least is pricing in fat tail risk, right? Getting above 150 is a very, very strong number, especially with the average itself right around the 145 mark. Again, that's that's where when you get to these levels, as it was for most of 2021, the market was pricing that correction in that eventually came and was so deep because it took so long for it to start. And we rallied so much in 2021, but you can see that we're getting into that scenario again here with the options market again, thinking that we probably rallied too much, and instead of looking for a normal pullback, is starting to price in the potential for an even bigger than normal, something that might, again, a pullback in our sense, in our terminology here. We look at something that pulls back down to like the 17-week or 30-week moving averages. So on a weekly chart. So something down to like maybe the 50, but more than likely to the 30-day moving average. This one actually got a little bit below the 50 for bouncing, and then the correction is a break below the 50 and makes it all the way to the 200. So that's unlikely this go around, but we'll see. With the MACD already kind of converging here. If we're going to start some kind of pullback where we at least drop towards the 30-week moving average, towards that 4,200 level, at least where it currently stands. Let's take a quick look at how the sectors are performing here. So let's rotate this chart over to the sectors. And this is an interesting pattern here today on the sector rotation. You'll notice here that at first technology and communications, or the discretionary, were both the most bearish by far, kind of towards the close of the European session. Then discretionary took off like a rocket and finished up 1% after being down almost 0.5%. And technology still lagged behind, though, well off of its lows, barely outpacing energy and utilities here. Communication services was your biggest winner, ended up being the biggest winner here today. If you take a look, just kind of some of the big movers. There's your Dow Jones Industrial Average. You can see why it did so well. United Healthcare, its biggest weighting, was up 1.5%. If you take a look at the S&P 500, so right here, and take a look at its biggest weighting stocks, obviously Apple ended up having a down day today. Microsoft. There's your big move in XLY to Amazon bouncing back up there, not filling in that gap yet. Nvidia and Microsoft helping keep technology from being too big of a decline, but then your XLC between Google and Meta doing very well. And of course you have like Netflix too, down up 2%, really helping XLC have a really good run up to the upside today. So that's kind of your biggest winner. Now keep in mind when you look at the 12 grid for these different sectors, you still got light pink shading across a board up here, and your safety trades, especially healthcare and staples, really rebounded here pretty nicely today, though there's still light pink shading. The utility sector is just getting hammered with the increase in yields, and real estate rebounding a little bit more today. Energy didn't do as well, but it's been the most bullish as of late. Financials also a nice little rebound today as well, with the jump, little small jump in yields there. But these are the three up here that really matter kind of the most, especially technology. Again, technology benefiting from the strength in other areas like Nvidia and Microsoft. A lot of the other tech names, even if Apple by itself was a big loser. And Apple, when you look at Apple's chart, here we go, look at Apple here. There's such a wide gap between the 50 and the 200-day moving averages, and it appears to be filling in. So today we were able to offset that with strength in other areas. I think if we fill in the rest of this gap, it'll be hard for the market to offset that. You can see Microsoft, like I said, is not doing as poorly, but it is below its 50-day moving average as well, into that gap. Amazon, we talked about this gap here. That's not really the most bullish, and keeps the potential open for filling in that gap there as well. Google, remember, was the big mover, also gapping up on its earnings and trying to figure out whether or not it's going to fill in its earnings gap too, and rebounding still inside of the post-earnings range that it had. So the markets looked as bullish as they did today, but it wasn't necessarily because of strength or a breakout move in any of these areas. They were just kind of rebounding moves more so than anything, and we'll see if I don't think that they will continue throughout the rest of the week. But we'll see if they do, and if they can turn into avoid the turn into consolidation and keep this current intermediate run alive. All right, now this brings us to our trade idea of the day. I'm going to take a look at MGM, and MGM has also pulled back here post its own earnings announcement, and actually dropped to some previous high points as well as the 50-day moving average. You can see it's dipped inside the value area the past year, but just barely. It's still got this strong volume support down below you where the point of control is. The MACD and stochastics are bearish, below moving averages, and bearish levels below 0 on the MACD, below 40 on the stochastics. But if you look at like the market forecast pattern, giving us a bull tag yesterday, holding that so far. Short-term sentiment still bearish, setting up for a bounce. The question will be how far up it bounces, considering, again, the intermediate line's below 80. It needs to get up and through that intermediate line and get up above 80 to really solidify a bounce here, which is kind of what you would expect. The weekly chart, you can see the weekly chart has gone bearish, though we did get a green arrow, so we're back up above the moving average there. That's a good sign for the markets. When you take a look at like some other oscillators here, the DMI has turned relatively bearish. It's a pretty strong level on the negative indicator, though not very weak on the positive, and that's again a sign of that we're not nearly as bearish as we think we are. The RSI and the CCI dipping to well below, again, bearish levels, kind of like that negative indicator on the DMI. But the positive dropped down to 40, and so far is holding. Or the RSI, dropped down to 40 and is holding so far. That's a good sign too for the stock. We did dip below the blue line. The rate of change, 26-day rate of change, is still positive though. We did lose our bullish trend, but that positive rate of change and just barely being below the blue line, well above the cloud, sets us up for a potential bounce here. So what I decided to do here is say, okay, let's take a look at a long put vertical spread. And the pricing of this long put vertical spread is pretty interesting. When you look at the Bollinger Bands for MGM here, you'll notice that we are still in the we are still up above the lower band. We're in the lowest quartile. But I take a look at September expiration. You can see we got $50 movement by one standard deviation. We can get up to that $50 mark. So what I decided to do is, okay, let's sell that $50 call option and then buy the at the money, which happens to be at 46, so a $4 wide spread. You'll notice that by doing that, let me get rid of there's a trade that went through. By doing that, by position sizing for our normal directional risk, which is about $500 here, we're only getting about a 2-to-1 reward to risk ratio, which typically when your max gain is this close to the edge of the one standard deviation window, you're typically getting like 3.5, 4-to-1, maybe even up to 5-to-1, and we're only getting barely more than 2-to-1. So what that's suggesting is a higher probability that we were going to bounce up here, that the market's expecting, considering again that we are at the top of the value area, above the point of control, and we're holding the 50-day moving average. There's a lot of technical reasons too that we've been talking about that increases the odds of a bounce. And of course, nothing's 100%, but I like I like what we're getting here, and so I put that trade through to see if we can take advantage of the pullback and see if it actually transitions into a bounce sooner rather than later. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Also, join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.